great pleasure to welcome Robert Lloyd George, who is Chairman and Chief Investment Officer of Lloyd George Advisory, Hong Kong, and a seasoned veteran with 40 years of investment experience in emerging markets, specializing in China and the Indian Ocean region, to Business at Night. Welcome, Robert.
Thank you, John. It's a pleasure to be with you.
Now, you publish a monthly investment outlook, and I was fascinated by your recent December outlook for 2016 and beyond, and I'd like to start with your crystal ball for 2016, possible big changes, wildcard events, and black swans.
Well, I was perhaps feeling very bearish when I sat down to write this last week, and it looked like Trump would be the next president, that Marine Le Pen would take over in France, and the British would vote to get out of the European Union, and that would have dire effects on the EU and indeed on the euro. And here out in Asia, we do see a definite slowing down, I think, in China and in Hong Kong. So that one thing I think that we should possibly expect is a declining property market in the main Chinese cities and especially in Hong Kong. And I think all of this against the backdrop of a deflationary cycle epitomized by oil now at $35 a barrel, all the minerals and the other hard commodities at a 10-year low. After this tremendous decade of boom fueled by Chinese demand, we've come to the end of that, and I think we're entering into a new era. So I am cautious, but, as somebody said, there's always a bull market going on somewhere. So I think we have to be very selective and think about the areas where there may be opportunities in the coming year.
Now, to take a look at the macro, it's the end, quite possibly, of a debt super cycle. We have China, Hong Kong, and India as maybe the sweet spot in this very troubled investment world.
Right, John. I think I share the vision which you and others have talked to me about of this Kondratiev cycle, which is a very long 50, 60, 70-year cycle. And clearly we're coming to the end of that. It's the winter with the low price of commodities, with the slowing down of trade growth and corporate earnings. And I think that people are very cautious at the moment. Now, that doesn't mean there aren't opportunities, but I think there's going to be a lot of volatility in the currency market. There may be recoveries in commodities, but I think we've probably got 5 to 10 years of low commodity prices. So when we look at China, for example, we need to try to see it clearly, and it's very difficult. Now it's the second biggest economy in the world, and in some ways it's a larger and less well-reported economy than the United States. It's similar in terms of being a continental economy, and there are vast areas of it now which are slowing down. The industrial economy, the coal-based power business, the steel business, the shipbuilding business, many of the large manufacturing enterprises around the coast which have depended on cheap labor from the interior. There are many of them sending people home. But I've been to Shanghai 3 times in the last 6 months, and what I observed there is a continuing consumer boom. Retail sales, e-commerce, domestic tourism, wealth management, these areas in China are growing at 10 to 15%. So the old economy is flat. The new economy, and I think there are some parallels here in the United States with that phenomenon, is growing very well.
Well, that leads me to the Lloyd George Advisory portfolios. The China and Indian Ocean region are a vital component in this otherwise slow to no growth world. And what sort of things are you looking at?
Well, in China, first of all, John, we're looking at stocks like China Lodging, which is a really well-run small hotel chain, about 2,500 hotels in China on the sort of Marriott model, but $50 to $100 a night, 90% occupancy, growing at 25% a year, no debt, listed on the NASDAQ. Very impressed with their management. Noah Wealth Management, largest private sector fund management group, $10 billion under management, not affected by the A-share crash in China, but really providing the new wealthy investors in China with good fixed income products, real estate investment trusts, and that type of thing. So I think you're seeing very interesting trends in that area. And then, of course, e-commerce, we own Ctrip, we own JD, we own NetEase, Tencent, and then some of these Travel Sky, which is the domestic tourism play. Now, if I turn to India, and we've been investing in India for 30 years, and there have been long periods when the market was difficult, and then every 10 years or so we'd have a really strong market. And what I think now is that the foundations are in place for a 5 or 10-year boom in this area. You've got a very good governor of the Reserve Bank of India, Mr. Rajan, who came from the IMF, and he's been very tight on the rupee. It's been steady. Interest rates are slowly coming down from a high level. Mr. Modi, the new prime minister, is very pro-business. He's trying to cut corruption, cut taxes, cut bureaucracy. It's slow, but I think over a 10-year period you'll see a tremendous change. India is 25 years behind China in terms of infrastructure development, electricity, roads, ports, airports, all that type of thing. But it's coming. And obviously India is a democracy, so it takes longer. But we find superb companies in India growing at 20 to 30%, the highest earnings growth in our universe. And we're now extending that to look at Pakistan, Bangladesh, Sri Lanka, even such a new market as Myanmar, which, as your listeners may be aware, has just elected a new government, probably headed by Aung San Suu Kyi. It's gone democratic, and it's opened a stock exchange in the last several weeks. So we're excited by the opportunities to invest in an area with a young, growing consumer population. Eventually it will be larger than China's, this area, and it has enormous benefit from lower oil prices. India's current account deficit's fallen from 5% to 1.5% in the past year because of the fall in oil and gold and other imported materials. And all of these countries are increasing their trade with each other at a pace of about 20% per annum. So we see a lot of benefit to the smaller countries surrounding India. And we think it's an area which is not affected by the Middle East, not affected by China or Europe. It has its own growth momentum, and I think it will become a very important area for investors over the next decade. So we've put together a strategy which encompasses all these, what you might call frontier markets, but it's centered on India, and India will be 50% of it.
Robert, now could you comment on the new realities and challenges, climate change, clean water, the deflationary impact of technology changes? Where are the winners in that group?
Well, I believe, John, that there is always tremendous opportunity in a period of intense change like this, where we're shifting from a carbon-based economy of oil and coal towards cleaner burning fuels like natural gas or nuclear or wind or solar. And it isn't going to be overnight, but I think it would be foolish for us to ignore the political will for this to happen and the effect that that will have on business. And China has signed on to the Paris Agreement, and they are going to really make an effort to reduce their air pollution, and clearly it's in the interest of the health of their people. So they're investing, for example, very heavily in electric cars. We've looked very hard at this sector. We're finding it hard to find a Tesla in Asia, but we have found a couple of Korean battery manufacturers that we think will be great winners from this change, because essentially you're going to be driving cars that have no moving parts. They just have a lot of batteries under the hood, and the key is to manufacture those batteries light and efficient and safe and be able to charge up your car easily every 200 or 300 miles. So if that takes off in China, it's going to make a big change to their atmosphere, to their oil consumption, and to the global situation. So these are the sort of opportunities that we're looking for.
And to conclude, I wonder if you could give us your website address for listeners who are interested in your strategy and team.
Yes, we are on www.lloydgeorgeadvisory.com.
And that's one word.
Yes, Lloyd George Advisory is one word.
I hope you have a very happy holiday, and we look forward to seeing you in Hong Kong mid-January at your conference, and want to thank you for your sage comment today.
Well, thank you, John, and wish you a very happy Christmas, and we look forward to greeting you in Hong Kong January 13th.
Thank you, Robert. Take good care.